The Bulls versus the Bears. Get in the game. www.tackletrading.com.
We are live, and welcome out to the Coaches Show here at Tackle Trading. TackleTrading.com is where you can find us. My name is Tim Justice. I'm the host for tonight's show. We have Matt Justice, my brother, with me, my co-host on our podcast, the Trading Justice Podcast.
What's up,
Noah Davidson. Hey, Matt, say hello to everybody. I'll let you guys drop in. Yeah, and then Noah, a trader extraordinaire, one of our coaches over at Tackle Trading. Say hi to the guys out there, Noah.
Hi to the guys out there, Noah.
And the ladies for Gino, I'm sure. Gino, that's right. And then Gino Poor out of Redondo Beach, California. The four of us make up Tackle Trading. We're here to, hopefully entertain and educate you tonight. I do want to remind you that this is for grown-ups, people who are interested in learning how to trade. Up on the screen right now, we're trying to capture video and audio, and this is our first one. So hopefully, if there are any mistakes or we have any stumbling blocks, go easy on us, okay, guys? We're going to try to improve it as we go.
Hey, Tim, real quick. I know the Trading Justice podcast is a PG-13 podcast.
Yeah.
What is the official rating on the Coaches Show?
It's going to be NA.
I just want to make sure. I just want to see where we can take this and where we can.
Well, okay, and by for grown-ups, that just means for people who are willing to take the risk that comes along with all the rewards that you can get from trading. I would encourage children from all over the place to listen to us, and try to exemplify this amazing behavior that we've managed to duplicate.
I agree with that.
I think what we should do is we should let the listeners and viewers rate our podcast the way they see it, Matt. We'll give them like a 5 sliding scale. We won't even use the official RPG-13 thing. We'll see what they think.
I'm going to go with rated awesome.
Yeah, I like that.
Awesome.
We're going to be here for probably about an hour tonight, guys. Maybe less, maybe more. We'll see how the conversation goes. We got a lot planned. And what I want to do, Gino, number one, is I really want to talk about that scouting report that you put up there on the Tackle Trading website in our scouting report section last Sunday. And I want to hit some of those stocks. I want to have Noah pull up the charts. We're going to go through that. Maybe even talk to the group for a minute. Well, before we get into any specifics, what is the scouting report and who is it designed for?
Well, basically, the scouting report is designed for all traders, and that's the great thing about it is we run some screeners every week, and I post our trades we're looking at, and the nice thing about it is we can do anything with those trades. I put the entry triggers, the stop trigger, and the difference between, so you know what the difference is between entry and exit, so you know the risk.
So you guys can see here, I actually opened up the scouting report. You guys should be able to see it here on your screens.
Right.
Yeah, so we got the scouting report up. It's one of our hotkeys on the GoToMeeting website. And recent report. Yeah, Tackle Trading. Yeah, hey, you catch me, speaking.
When Gino hit the keys on his keyboard and Tim dropping podcasts when he's
I'm not sure. We're doing all kinds of fun stuff there.
It's not a fantastic start, gentlemen.
We can always start over.
We have that. Touch my keyboard.
Hey, listen.
I think Gino's back there typing War and Peace. What's he doing?
I don't know what he's doing, but if he's typing War and Peace, it's with the chicken finger. It's a poke. Lord almighty.
Chicken finger. That's pretty talented if you can type with one hand, right?
There's only one rule on the Coaches Show, on the podcast, on everything we do, and that's we do not edit. We don't start over. You're always going to get us, and that's the thing that separates us from everybody else.
Are you sure about that, Matt?
I'm too lazy to edit. It has nothing to do with integrity. It's just
no, I know. I'm just saying I don't have a filter. That's all. Some people actually think then speak. Not me. It's off the cuff all the time.
Shoot from the hip. And I do have a couple questions for you regarding
yes.
your scouting report, because that's primarily your little baby so far. The rest of us will try to help you out along the way. But first of all, I know you do your entries, you do your stop losses, you do your targeting on that. But how do you go about creating? What is your process to create your list on your scouting report?
Well, that's the main thing is you can get stock picks anywhere, as you guys know, from Wall Street Journal to Kramer to any Yahoo on the street. But what I'm looking for is there's 4 different screeners. The bulls team, there's people that like to be bullish.
Yep, you guys can see that. I've got the most recent list up here on the screen.
Right, so here's on the bulls team. We're going to throw about half a dozen on each screener. So I'll get a bulls team screener. What that's looking for is stocks that are doing my favorite setup and want to know is it's called a bullish pullback. What that means is, if you don't know, is the moving averages are already going up the 10 days above the 20, and that means the stocks are already bullish. But what this screener does is it looks for a stock that's below the 10-day moving average and above the 20, so it's in that sweet spot called bull area. Now that doesn't mean it's going to be bullish, it just means it's already in a bullish trend. Therefore, the odds are, if it's pulled back and the market being bullish, it should continue. So I look at the sector to back that up, make sure it's bullish. And what we do is we put our trigger right above the candle if it's close to the 20-day moving average. And we draw our channel lines on there. And like, I'll tell you, like we had a couple in there.
Well, you put Facebook on the list here, and I actually pulled it up on the chart just to kind of give you an idea. Like that's the setup where you.
Yeah. So, for example, Noah, if you type in one of ours from August 10th newsletter, we're still writing this home run here. So, Matt, I put about a half dozen in there. Sometimes less, sometimes a little more. Because
are they all technically driven, Gino?
Most of them are technically. That's the primary scan, and then I go into fundamentals and sector. Now, if you look at Sherman-Williams, SHW, it's a home run, but you got to remember we're already stopped out of the other 5 on that list.
Okay, so you put that. This is when you put out on the 10th, right? So you put on. So I'm there, got it, pulling up the list, and
if you throw that on the chart, you'll see that we grabbed it on the sweet spot. What we're doing is we're doing a group of stocks that look good and putting our trigger on there. You'll notice I put comments on there, nice ATR or a W breakout.
There's your list.
Other than that, these are just bull pullbacks.
Yeah, so we got Sherwin-Williams put out on the 10th. I'll go ahead and pop open the chart. And it is...
We got it at 209.
That's sexy right there.
Yeah, you caught that pretty much. You know, if we go back to the 10th there, this is Gino pulling it right off that. That's over the weekend right there. So the 10th, there it is. Boom, you caught it. Literally, it's been running since you. I think that Gino is like good luck. It's like
that's a home run right there.
Right. Given my day yesterday in the market, I think I'm just going to trade the scouting report blindly.
Bam.
Well, I'll tell you, I was thinking about this while I was sitting here listening. How many new traders could use a list of stocks to trade with? I mean, this is the kind of thing for a beginner, right from the go.
Well, and I also want to point out a couple things here. Number one, these aren't stock picks. These are all technically driven. We do not give recommendations. We do what we do, and people can learn from that experience. But at the same time, having somebody like Gino Poor, who has been in the markets for now, 16 years?
Almost 17.
Almost 17 years now. Mentored with some of the finest names, being taught by some of the finest names in the entire financial markets. Having somebody like that to be able to write a scouting report on a weekly basis, that's powerful. It's very powerful.
It's amazing because it gets better every year. My as you know, looking for stocks and building your report. I'm not looking for that. I had no clue Sherman-Williams would be the home run hitter of the team there, but you do a group, and what's really great about the scouting report is the risk I put in there. You could pick you can see the risk is $3.20, and that's an expensive stock. It's $209, and a lot of times I would have passed that pickup as a beginner because it's expensive. But with the option strategies we discuss on our coaches show like tonight and on our video blogs and the stuff that we put out, there's strategies anybody can play this.
Well, let me actually take a moment and talk about that. We got the scouting report came out on the 10th. We got Sherwin-Williams here. The entry price was $209.20. You got it right there on the list. You got your exit price for your stop at $206, and you got the risk at 3.2. So let me actually pop open the chart and put that out and to actually translate it. That means your entry price was at $209, and you put that where it required the price to go up. So it required the price to rise in order for you to get in, meaning it was doing what you thought it was going to do. That's confirmation, right? and then you put your exit, looks like down at 206 below the candlestick. So you had your exit down below the bottom of that candlestick.
And no, I would have put my exit down below 204-ish, be below the major pivot there. It's just with an option trade, that would wipe out your option.
Yeah, it's a little bit too much leverage for that. So
you got to draw the line somewhere. So I put it below the next closest support, which was that candle you said.
And so now what you have there is, and this is kind of what I like about this particular strategy and this particular setup, when you put that entry in there at 209, and you have a known exit, which it looks like it's about 1 ATR away, and below candlestick low, and so it gives you a good exit for the option. But your upside potential on that's really, really nice. The thing about this, one of the things we always talk about is what we call that potential average yield, where we know how much that thing can swing. And I've drawn a little line here. You guys can see that's a known range for that bad boy. And if you look at the percentage of the range, and that's where it's at right now, and it's slowing down and it's giving little signs of reversal, the percentage of that range that you're risking is maybe, I don't know, what would you guys put that at? That's probably 1/6 of the range. Yeah. One fifth, 1/6 of the range. So you've got a really favorable reward to risk ratio on that, and that's always what we look for as a directional, technical trade.
Well, and also, Noah, you're coming at the top end of that range on Sherman right now, and what are you seeing over the last 4 days? I mean, you're seeing doji affair.
Yep.
And it's the stock basically telling you that it's reached its potential and it's ready to start coming back down, and potentially locking in profit right now is wise.
There you go. That's the top of the channel, and it's slowing down. So this kind of takes me back to one of my first really strong lessons as a technical trader, is that I forgot how nice stocks were. They actually, here, if you look at this, Gino, they've given us 1, 2, 3, 4 days of notice to sell. They're saying, hey, Gino, you should sell. No, seriously, Gino, you should sell. Hey, Gino, if you didn't catch me the last 2 days, you should sell. And I'm giving you a hangman today. I mean it, mister. You should sell.
You better take some action, buddy, or it's going to go from a home run to a
but you don't get these nice warnings that it's going to drop like this.
Yeah, and that's a really nice signal for that. So
not only is it in a bull pullback when I pick these stocks, I do like to make sure there's a channel like the one you drew, so you have a target. When it hits the target, you got to take it out. You got to take some profit.
Yep. In fact,
especially in this market, guys.
Absolutely. I like to sell on the way up because I can be out of the trade. You could have been out of the trade 4 days ago at a maximum profit.
Yeah, and if you notice, I put out a blog that I did liquidate, I think, 80% of my position about 4 or 5 days ago when it hit the target. You know why? The profit was more than enough to cover the risk of that last contract in there.
Absolutely.
So
you use the word contract, Gino. Let's not assume that our audience knows what that is. We probably have very experienced traders listening and intermediate ones, but probably some beginners too. When you say contract, kind of describe that to the audience out there.
Well, what I did is I purchased contracts, 5 or 10 option contracts. It's not the stock. The option contracts give you the right to buy the stock, and they're about 1/10 of the price, if not cheaper. So no matter if I'm doing contracts in spreads or with a single option, what I do is I sell a portion of those contracts. So if, say, I did 10 of them, I might sell 8 of them, take the profit, and that's enough profit to cover what the 2 I left out there cost. So in other words, I'm not using my money anymore. It's risk-free. And in that case, I'd let one of them ride.
Okay, we're going to pinch hit this one. Matt, explain it for Gino, since he didn't understand my question, I don't think.
In terms of contracts?
Yeah, what is a contract? Think of the simplest way to explain it.
A contract, 4 tradable instruments: stock, options, currencies, and futures. Stocks trading shares, option trading contracts, currencies trading lot sizes, futures trading contracts. A contract is nothing but a contract between you and the market, wherein when you buy a call option, you have the right to buy the stock. We never exercise our right to buy the stock. We are simply buying the option to reduce our cost so that we can make a lot of money.
Now, Gino, I was just giving you a hard time there, by the way, but expect it from me. Okay.
Yes, it's an agreement between the buyer and the seller of that option contract to buy or sell the predetermined stock at the predetermined price on or before the predetermined date. So we can start breaking out definitions. We should put up a glossary of terms for the coaches show, including Gino-isms, Tim-isms, Matt-isms, and Noah-isms, because there are no definitions for some of the things we'll be uttering. So
that's true.
So
I'd pay money to have somebody gather that up. Yeah.
It's basically you're buying a coupon for the stock. It's cheaper.
Cheaper. Yeah, I like that. Yeah, you're getting in a percentage, and generally when you play at the money, somewhere between 5 and 12%. This market we've been around 6 or 8 for at the money options for 2 or 3 months out.
Yeah.
Some 5%. I mean, it's ridiculous.
Yeah. Now this was a winner. Show us one of your dogs. I mean, not everything works, and I think it's important for traders out there to know that. So.
Well, if you pick anybody else on that list, you'll see that a lot of them stopped out as soon as you're triggered. I'd say probably more, just about half of them stop out. Like if you look at, NDAQ or NTRS, you got stopped out. And we actually put the ones we're stopped out of on the comment section during the week.
So you go back there to the 10th, and it's back in here. Is it triggered? Now this is actually we need to define this trade. This is what they call the MF trade. The MF trade is because you called it in the bull area, it triggered into your trade, gapped down, kicked you out of the trade, and then ran on to victory and taunted you the entire way after you got stopped out. So therefore,
you know where the MF comes in? The MF comes in. Do you see that little support where you put the stop?
Yep.
It actually reached 15 cents below that just to take you out.
And that's the MF, and that stands for most frustrating trade. Most frustrating trade. Because you called a winner, and in this case, this is where when I was new to trading, I got kicked out of trades like this, and then I didn't want to use a stop loss.
Hey, can I tell you the psychology?
And
I'm going to go back to my amateur days of trading, like the first 6 months, and you guys can back me up on this. When you get a trade like this and you get stopped out, this is what happens to your brain. You go, I shouldn't have put a stop in there.
No, you always put a stop in there.
Yeah, but this is what happens to the beginners. You go, I got stopped out, and this thing went up $3. Darn it, it was a home run. I was right.
That's new traders with a lack of perspective.
Right, and so what happens is this scares you from putting stops in.
Yeah, but the reality is, typically when a lot of traders get stopped out, especially new traders, it's because they place a 10-cent stop loss. I got no problem when you place your stop loss here on NDAQ. It's underneath support. Right. The stock gap down, and sometimes this happens. And it's frustrating.
It broke the channel line. It broke all the supports. It took you out. It shook you out.
Well, even when
there's a gap down.
Sorry, even when you do everything right, you can do everything right and still get stopped out. But when you're new to trading and you do lack the perspective and experience, psychologically it does trigger you, encourage you to not want to use the stop losses. And what'll happen is it'll actually reward bad behavior sometimes because you'll win. Like a trade like this, you'll win instead of getting stopped out, and so then you'll start to abuse that rule more often. And invariably, what'll happen is it eventually takes you out behind the woodshed and gives you a severe beating and teaches you why you use a stop loss.
Well, and also you got to think about over 100 trades, 200 trades, 300 trades, a year in the market, 2 years in the market. I've done enough co-trainings with Tim he preaches this from the very beginning. What's the number one rule trading? What's the number one rule trading? That's to place the stop loss. You just got to be consistent with it. Don't place too tight of a stop loss. You come to our website. We'll definitely teach you a lot of different ways you can place a proper stop loss.
Yeah. So that's a bummer. That's an MF trade right there. So there's a lot of those on bull pullbacks. You're going to get a lot of those.
Yep.
Let's think about this. Go ahead, Matt.
I was just going to ask you, because a lot of these are on the retracements, the pullbacks and whatnot, which are lesser probability of success than something like a breakout is. What is your favorite pattern, Tim? Because I know we're looking at a lot of pullbacks here.
Well, my absolute favorite pattern in the market is the kiss of death, but we just haven't been in a bear market that has been sustainable
but we
for a
all
long
jumped
time.
at it. Every last one of us looked at the Dow and saw the kiss of death forming, started salivating. Here, I've got it on the screen. We all saw that set up, hoping and praying. It's like you want the market to die because that kiss of death is such a good setup.
My favorite tradable pattern, though, Matt,
yesterday,
probably for 4 years in a row when I've been doing delta trading, is when a stock gaps out into a new direction with strength and momentum and institutional intent behind it, consolidates, and then that next breakout, whether you call it a high base, ascending triangle, whatever it is. So those conditions, breakouts are really, they've been really good in this market. You know, this whole quantitative easing, Fed propping the market up system has been in for
High
6
base
years.
breakout has been the number one pattern over the last 3 years.
Love that. I love me a cup and handle whenever I find them. It's essentially similar to a high base. I've got one on the screen right now. It's just that coming up to resistance and initial profit taking, and it reloads. It sets up, and the buyers step back in, and it takes another stab at resistance. A break above resistance, I actually, in comparison to a retracement, what I found over the years is they're more forgiving on the stop loss, because the break out where the retracement's coming down, like when we were looking at the what was it, NDAQ, the one that got stopped out. All right, what was the symbol again?
NDAQ, you got it.
ND is NDAQ. Now it's not coming up for some reason. Yeah, it was there, and it just had the pretty retracement, but the prices are coming down into that support zone, like Sherwin-Williams was as well. And it's when you get the breakout, the price is already moving up. It's already moving in the right direction.
Would you also say that's the difference between a momentum-based pattern and a slowing momentum pattern, though?
Well, yeah, I mean, definitely. It's when you have a momentum pattern, and I think just in general, a retracement requires. When I use stop losses on them, I go looser on retracements than I do on breakouts, because breakouts.
Well, and I did see one subtlety between the difference on NDAQ and Sherwin-Williams and Gino's trade. NDAQ was caught more towards the bottom, whereas Sherwin-Williams waited till a good 4 or 5 points back up.
Yeah, had a little bit better confirmation on it, so absolutely.
Loving it. Gino, what was one from the 17th?
You might want to close out Noah real quick and reload.
Yep, I got.
Let's keep.
So
these were a few from the 10th, Gino. What about the 17th?
17th, we still had a couple home runs there. GMCR and MHK, which again are starting to peak out. And we just had one put up Sunday. NSM, I think, is starting to build up a home run area here. I'm starting to look for some profit. But yeah, the 17th, we had two. Now, this one didn't come from the bull area. So the first team, if you check it out as a bull.
We're waiting on the screen here, Gino. So let me ask you
a
segue question.
Yeah, we talked about the bull area.
With these from the 17th?
Yeah, that's the 17th.
Okay.
And then we're going to look at one from the 24th. Let me ask you a bigger picture question real quick, Gino, then we'll get into the details. How do you envision tackled trader community members using this scouting report?
Well, the way I would approach it, and the way it should be used, is when you listen to our video blogs and our blogs, our tweets, we're always talking about the market conditions. And if the market's bullish, you're better off being on the bull team. But we do throw picks out there for the bear team. And the reason is because there are some people that want to do bearish trades, and I also hedge my portfolio with some bearish trades. But I make sure they're in a bearish sector, and they're the cream of the crop as far as being in a bearish trend. So this way, there's always.
I kind of think of it like throwing a virgin into the volcano. You have to sacrifice one to the gods, right?
You got it.
But I'm not sure what just happened there, but that's awesome.
Yeah, it depends on what tribe you're in.
You know she's a virgin, too.
She told me so.
Yeah, keep your virgins away from Tim.
Hey, we said we didn't know what the rating was.
Sorry. I'll tell you exactly what just happened, guys, with my software, by the way. I share it with my girlfriend, and she was logged into it. So I went to go pull up my charts, and my awesome trading girlfriend was using my software.
She is an awesome trading.
I have tried to get my wife into trading for years, and she has no interest.
Hey, Tim, do you know how I wrote that little dissertation today?
Yeah.
I feel like it was just such a great success because I got my wife to read the first paragraph.
Nice.
And then the first time it said Keynesian. The first time it said that, she shut it down, wouldn't read it anymore.
Oh, I got a great one for you. I mentioned tackle trading 2 days ago. My wife goes, "What's tackle trading?" I go, "It's a trading website we've been working on for a year."
We've only worked on it for a year and a half. Hey,
so Gino, walk us through another one of your picks, and then we're going to get into something else in a minute.
So you got the Bulls team, you got the Bears
awesome.
team. Let me talk about one of my favorite screeners on there. This one's a gem. This is the one that the home runs came from on the 17th. What this is is I put an extra little ingredient in this one on this screener.
Cheap
it's
options.
the cheap options for buying. What this does is it not only looks for decent setups, but it looks for stocks that are big movers, meaning they have an ATR that's better than 2.5. An ATR means it moves at least 2.5 points a day. So you can, I'm looking for guys that move. So these are going to be your stocks over $100 usually. And the nice thing about this is their options are dirt cheap. I put a little ingredient in there that looks for record low volatility. These guys are from 0 to 10% off their lowest volume. So you're not going to find like Google, GMCR. Their options are expensive anyway, but when they get down dirt cheap, so what we do is we do strangles, which is we're buying a call and a put, or we do debit condors, where we're buying a bullish spread that's dirt cheap. So think about this, Tim. I like buying options, but the reason we trade options is because they're cheap. That's the main reason. Everybody knows that. That's the only reason. It's because they're dirt cheap. But I'm finding the cheapest of the cheap options and finding the cheapest strategy. So some of these trades, we're getting in there for like 15 cents.
This is also how Gino picks restaurants, is why we never got to eat with him. So
He never gets to
And hairdressers.
yes, absolutely.
What's a hairdresser?
Well, I'll tell you, I think what's interesting here, Gino, and my reaction to it is, it's so exciting when the first time I was introduced to the long iron condor, where you actually debit an iron condor. And it's a testament to training and education. And Matt, maybe touch on that a little bit. We're going through strategies, we're going through terms, we've got a diverse audience. What advice would you give to the user out there who's hearing some of this stuff that may not be processing all the terms?
Go to tackletrading.com, sign up, and get educated. And don't take my word for it. Take everybody who's ever any guest on the Trading Justice podcast. They've all said the exact same thing. Go get education. Go learn the system. Of course, some of the terminologies we use is confusing. Guess what? You've never been trained on it. Terminology is a little bit confusing, but go do it the right way, guys. That's why we're out here. That's why we're doing what we're doing. Terminology, don't let it stop you. There's no obstacle that should stop you. Get educated. Get training. You have alternatives out there. You have alternatives to the traditional model. You have alternatives to the 401ks. You have alternatives to financial ignorance. You have alternatives to losing money in bear markets. Go find them. TackleTrading.com. Boom.
Yeah, great advice. All right, so let's pick one of these out, Gino, because I want to talk market conditions. I want to get into some other things I had planned. So maybe pick one out that you think the group can learn from, and let's talk about it.
Well, let's check out GMCR.
Yeah.
GMCR, it's a mover.
Well,
it's a mover. It's in the news.
Let me stop back and start out at our big market condition. Just why I think this one would be a good idea is when we look at the S&P index, we pop out here and look at the S&P index. It's out here and it's slowing down and it's up against that big fat 2,000 number. We're at all-time highs. Our price action, these little candlesticks, are showing that the price is slowing down, and it's in an area where a lot of traders would consider it a little trend resistance zone, and it is a big fat number, 2,000 psychologically. Just go back and look at what happened when the market got to 1,900. Big fat number, it got to 1,900, and that became a ceiling that took months and months and months for it to break. You go back and look at 1,800. What happened at 1,800? You have to go back long enough, and it was a price ceiling at 1,800. The market, when it first got there, it had a big fat number reaction. It sold off every time it got up to 1,800. So now that we're over here at the big 2,000, we've had a 2-week run up, which is a pretty good run for the market, and I think I wouldn't be surprised to see profit taking the next couple of days.
A couple ways to think about that. Number one, 2,000 is psychologically a much more bigger number than 1,800 and 1,900, and yeah, it took months for those levels to break. These types of numbers, they're like trench warfare, World War I. It's buyers and sellers fighting for position right now, and because the buyers have been overextended to a certain extent over the last week, you're going to see sellers and bears start to come back in and dominate price action. And one of the things that we saw in the S&P 500 this week is all of this movement has been done on extremely low volume.
Yeah, very
low. Let me show you the futures on this.
There's no commitment behind the movement right now.
That's it right there. S&P futures, as the price ran up, the activity and volume dropped down, and it's half of its average. And when you start looking at some of the economic underpinnings and some of the article you wrote today about Keynesian economics and boom and bust economies and what's really behind this is stimulus inflation. It's easy money.
Yeah, guys, go check out that article at tackletrading.com.
So with that preface, coming in and looking at the scouting report and looking at the bear candidate, the timing's very, very pertinent. And as we looked at GMCR, it popped up, big run up. It's running out of gas volume-wise, so this would be one where I'd take a revision to the mean.
Yeah, exactly. It's overextended, and a cheap way. And the options are the cheapest they've ever been.
So
top of the channel.
Candlesticks are shrinking, volume's waning, the momentum's dying, and you have cheap options where you can take a stab at it. Where buying your put option, your contract to sell the stock, would be beneficial. You think you put on there put condor? What were you looking at? Put spreads?
But you can do either. You can do. It depends on what date you're playing this one. The options are still cheap, but on there you can pick whatever you want. Like Tim was saying, the debit condor is the cheapest way to play these. Your risk reward is 5 to 1. You're going to reward 5 times what you put into these.
Well, also, don't you make money and if it goes either way?
Exactly, on a debit card. But if you want to pick one side of it, that's fine too. Like right now, I would be doing the bear put. I would be buying a bearish spread, playing the downside, the retracement to the means. Because the market, I believe, could pull back, and stocks like this that have ran up are going to just pull back with it. And it's low risk. It's a better way than shorting the stock. And again, what I'm doing is I'm taking the cheapest options and doing the cheapest spread, so anybody can go out there and not worry about the risk.
You're listening to the Coaches Show with Noah, Gino, Tim, and Matt. Hey. TackleTrading.com. Take control of your financial future. Matt, how was that drop? A little bit better?
I liked it.
You're getting better at it.
Yeah.
You're getting better at it.
I'll tell you what, Gino, those are cheap options. When you look at the price of the stock at 134, put option out there is coming in at $6.33. You normally expect that to be $13, not $6. That is beautiful.
Yeah, and if you turn it into a spread, it gets real cheap.
And then
what happens if it just goes to 125? How much money can I make?
Well, why don't we sell that option down? If it just drops to 125, you double your money almost. You get about 100% return down at 125.
And what's great about this is I actually do 2 weeks out. I go 2 weeks out on the weeklies on these things, and I'm getting in there for like 15 cents on a spread.
Oh yeah,
depending on the size of the spread. If it's a 5-point spread, I'm usually getting
doing that on weeklies. I mean, let's just put it out there, guys. That's a big boy trade. Don't do without it.
Yeah, I was going to say, Gino. Remember, there's children watching, and there's grown men with the minds of children listening. So, keep that.
It's a good trade, but for those of you without Gino's 18, 17 years of trading experience, go buy a 2-month option and just hold it for a few days.
That's why I went and pulled up the Octobers automatically, just to make that.
7 days. Hey, Noah, do me a favor real quick, talking about macro markets here. You mentioned the kiss of death here, and I was looking on my screen here. I was looking at some of the sectors. Pull up a couple sectors for me, and I want to get the group's take on a couple sectors here. XLE, the energy sector.
XLE. Hold on, missed the symbol there. XLE.
Oh, I like where you're going with this. I was just looking at this.
All right. I see kiss of death is what I see.
KOD with slowing momentum directly right there, approaching a significant number in 100. Had a lot of hard time. I honestly think you can make some good money in options in the energy sector over the course of the
next you're killing me on my options trades, damn it. Did I say that
out
loud?
Here's
Sorry.
the thing. I'm looking at the same. You're thinking kiss of death, Matt?
Oh, yeah, definitely.
Yep.
The one thing I'm looking at, the catalyst of this has been the dollar. If you put in the UUP, it just closed today, and I tweeted it out to the listeners for Tackle Trading today. The dollar closed inside the Bollinger Band after a long run up. So if you throw a Bollinger Band on there, it's an overextended indicator.
Yep. It is
the dollar's been on a run, and that's what's really taking.
I was asked the other day why the dollar has been so strong. lately because you guys both know I do a lot of currencies here, and I said it doesn't mean the dollar's good. It just means the euro's that much worse.
Yeah, it's the least
Absolutely.
it's the least ugly contest if you were to look at it that way.
Yeah, exactly.
So
there
the Bollinger
you are,
extension, do you think it's
outside
going to
that.
revert back?
So this is the actual dollar index I'm looking at. I went and switched from the UUP to the DX
Gino,
dollar
did you
index.
go short? Did you go short dollar now on UUP?
No, not yet. Not yet. I just recognized this.
This long euro today. Long euro dollar.
All right. So if you're looking at your dollar dropping, here's what I think that would do to the price of oil. It would go up. So I would look at the exact opposite on the price. This is actual price of crude light, and it's at the bottom of the band. And,
I like crude going up, and I like short energy.
Right. So this is a revision trade where these are historically they are negatively correlated because you buy your oil in dollar bills, and if the dollar is expensive, then it means you get your oil for cheap. Your buying power for the dollar's high.
What you said is obviously 100% accurate in terms of the reverse correlation here. But you talked about buying, oil in dollars. Why is that the case? Why do the majority of the world use U.S. dollars to purchase oil?
Well, you're talking about your petrodollar, but if we go down that rabbit hole, we'll be here for more than an hour promised. So
I love talking about.
Well, what you did is Noah, you just lit a match and you threw it into a dry field of saltgrass.
I know. Sorry about that.
It's a wonderful topic, and I love hearing Matt talk about it. There's no doubt about it. We can talk about it for hours.
Let's take it back to trading then. Can I be successful in my short energy and long crude?
Yes.
Yeah.
Where's the drawdown in that trade, guys? Pick it apart. Short XLE, long CL.
As long as you got a stop loss on either of them, one of them's going to win.
That's kind of what I'm thinking. Am I wrong with that?
No. I was looking at the same
and what
thing
you're
today.
talking about here, Matt, is a pairs trade.
Yeah.
Talk about what pairs trading is.
It's just a creative way for us to limit our risk even more.
Mm-hmm.
Yep, there's a lot of ways to skin that cat, for lack of a better term. I like the pairs trading. It just increases your odds. It gives you where the typical buying and selling behavioral patterns of the institutions kind of show their cards, if you will. Is a simple way of saying that they typically do this when the dollar's high and the buying power is strong. That's when they want to go buy up their oil. And when the oil's cheap, well, it's on sale, and so that'll create demand, and that they'll revert. They'll flip in on each other, and we've seen it enough times that it's like their poker face. We've seen it. We know what they're going to do, and barring something strange, we typically get the right reaction.
Okay, now another one I want you to look at here is XLI, the industrial sector.
Yeah.
Okay. A little lower low coming in. I didn't actually format that resistance level, but still in the same type of pattern. Now you might want to go and short on XLI, but look at something like let's say CMI.
Well, I'll tell you what I think about XLI is the whole sector there. I mean, there's only one time in the last 2 years we've seen it run quite that much, and it's run pretty much. That's way more than it normally has. One time in the last 2 years, it's gone more.
And also know that's based in the February movement in the market where you had the terrible January, and then you had the market make up for it in February. So that was more macro market than it was.
So I would say, looking at what we've seen in the past, that's a pretty bold move for the industrials. It's that range up. It's in a known resistance zone. And I would personally take that to the short side. I'd say it's sell high, buy low.
Okay, so I'm looking at a stock CMI, Cummins Incorporated. It's in the industrial sector. We know the sector's going down in terms of its, where it's at or extended. Cummins already in a short-term bearish downtrend. Underneath the resistance levels. Okay, hit resistance right there about 148. Already confirmed going back down. Thought process is, put this on the scanning report. Thought process is bear put to the downside.
Yeah, I was going to say, do you guys mind excusing me? I'd like to be alone with this chart for a while.
Yes, it's a good one.
Because it's going to give a kiss of death here, and I'm thinking about full-on makeout, so
Yeah, PG-13.
PG-13.
Nice pick, Matt. Appreciate that.
Just go to third base.
It's all good.
You know.
It's all good.
Yeah, that's why you do the bear put instead of just a put option. You're a young kid. You're a young trader, Noah.
I know.
You know, just second, third base.
Exactly.
No, nothing under the shirt.
Yeah, this is awesome. I think that new low, I think we're heading for new lows, just like this chart.
Yeah, it's just like CMI. That's what I have to do.
That way.
Wait an hour to do this coach's show. Last one here is in the defensive sector, utility. It's a defensive sector, utilities, XLU.
Okay, utilities sector, which is where people pay their utility bills anyway. They're regulated. I would say you're still in a bear ballpark area. It's pressing that support
Well,
zone.
the reason I picked these three instead of the other 6 sectors in the S&P 500, these are the weakest of the bunch.
Yep.
These 3 sectors: industrials, energy, utilities. They're one of the weakest in a bunch for a reason. The other sectors are overextended, and you heard Gino and Noah earlier tonight say the revision to the mean type trade. That revision to the mean type trade is a big boy trade. Okay, it's a reverse trend type trade. But these types of trades, in terms of the energy sector, the industrials, and the utilities, those are still somewhat in downtrends, coming into resistance levels with industrials and energy creating a kiss of death. And they're also very aggressive sectors as well, so could be opportunity.
Well, let me compare
sectors.
and contrast, Matt. Let me actually go here and do something a little bit different. I'm going to go and load up a default template where I go load up a factory default template with like moving averages and MACDs and stuff. And I'm going to come back in and just talk a little bit about this. I went and put up the XLV, which is I'm going to remove that stochastics, which is the healthcare sector. And this one's making new highs. It's like you say, a strong stock. I don't want to pick a fight with that one. This MACD indicator is opening up and hitting new highs, and it's showing the momentum on that strong, where we were looking at the XLE sector that Matt's picking a fight with, where we've got the lower high, and you actually have an indicator that's showing, this has gone into a little bearish type scenario.
Yeah.
And there's a big difference between picking a fight with one that's overextended, that's really a strong sector, versus picking a fight with the weakest sector of the bunch. This is the Darwinian trade.
It's picking a fight against Manny Pacquiao, or the drunk at the bar.
Yeah.
Which one would you rather fight?
Is he already passed out? That's what I'm.
He's slurping drunk. That's what he is.
Fantastic. So
and he's been offended to your wife. It's
there
easy.
you go.
It's an easy fight.
So I like the setup. Wait for confirmation on those, just to make sure you've got the stock price moving the right way. We just make sure it's heading down. You of course want to limit your risk on those. Stop losses, position sizing, whole 9 yards.
I love it. And it's really nice to have video while we're all watching this stuff together. Technology is pretty cool. We can all see it, talk about the charts. There is a lot going on in the market right now. One that I traded actually on Monday, Noah, was Google. And I'm going to change gears a little bit. We're all talking direction. I actually played this as an iron condor. Now, it's been dropping on me a little bit, but it did start to become range-bound, and I played the weeklies that expire this Friday.
What's your strike prices?
I have 560, and I have 600.
You're golden.
And you got 2 more days? You're good, man.
It could make
2
you
more
sweat.
days.
If it broke and give you a real hard run down, it could make you sweat. But
You're gonna overanalyze on Friday, but I think you're gonna be good
that's
on
good.
it.
That's got the same lower high.
Oh, you know what? I just forgot to tell you that. Breaking news. I should put this out there on the tweet. Yeah, Google filed bankruptcy, Tim. They're
They're
gonna open up at $2.
Today,
Did you Google that?
Oh.
Yeah,
No, but-
I'm going to Google that just to make sure you're.
Yeah, hold on. I was in class tonight. I want you to pull up SWHC.
Oh, Smith and Wesson.
Yeah, people in Amber County aren't buying guns any longer.
Dang,
Look at
dang,
that.
dang.
Little runaway gap, huge momentum. Pull up the volume on that bad boy.
That's been the greatest covered call for the last 2 years.
It is not anymore.
I actually put I went long on this at the bottom of the channel with the back ratio, and the breakdown was a beautiful thing because it didn't hurt me at all. So I took a stab at it to the upside, And that's an earnings. Boom.
Look at that thing.
Yeah.
I'm thinking $10 is a target, guys.
Yeah, that's got momentum to the downside. When I looked at this, let me take you back to a weekly perspective on that one. A couple weeks back, I thought, hey, this might be at the bottom of the channel and head up. And it violated pretty hard, broke, and that's what we're seeing, that movement down. $10 target, I would see it 10.35, somewhere in that ballpark.
Yeah, I think I'm going to go short tomorrow morning on. I haven't done it yet. I found it tonight when I was scanning. And I think I'm going to go to $10.
No, Matt, I think you need to be completely honest with you. What happened is one of his students wanted to see the chart of Smith & Wesson, and,
Actually, you know what I did? I had 30 people in class tonight, and I had 5 minutes, and I segmented it into 5 groups, Noah. And for 5 minutes, I each gave them one scan. I told them to find their best stock. What they don't know is that was just my scan.
Right, they're just doing a homework for you. I do this all the time. This is the greatest. This is the greatest thing about what we do. Listen,
I know how many trades those guys get from me. I felt okay.
Education is the key.
But no, I'm thinking cheap contracts here on Smith & Wesson down to $10. You can turn a quick, 70-80% profit. And Gino, the one problem with trading in the stock market is you have to trade the stock. I'm trading the option.
Right.
True story.
Yeah, this is actually one of those stocks that's cheap enough where I might even short the stock and protect it with a call.
I like that.
Just because it's so cheap, and to get that delta out of the stock.
Yeah,
another story about this. Smith & Wesson was one of our top fundamental picks for the last couple of years.
When you say
17,
no, it's not TAFA tradings. It's market bets.
Yeah, it was based on screeners and software and stuff.
Yeah.
But it was also not Investor Business Daily for a while. But look at the chart. You got to ignore the fundamentals when it breaks down like that.
In fact, that's when I thought about going long on that, and I drew that trend line. And I thought to myself, I was picking it up down here. I'm like, I liked it for the upside. When it broke, all bets are off. That you change your bias. You trade what you see, not what you believe. And the market, when it makes its opinion known, doesn't matter what the fundamentals are. Because people are selling.
Biggest thing on science, man. Here, a couple other students' picks tonight. These are our students, guys. Is CSTM. Pull up that one.
Ooh.
What do you think of that little breakdown?
I see an M, heads and shoulders. I see multiple reversal
Head, shoulders,
patterns.
kiss of death.
Coming into that 200 period moving average, which I never have on my chart, but just happens to be here now. It's an imaginary line that some people look at. That they think it's a good reason to buy, and it's in reality it's not. It's just something that people will talk about. I think that's dropped to 27.
Yeah, I agree. A cheap little 2-day trade there. LO.
What's this one?
LO. L is in love. O is in October.
That's Loillard.
Yeah.
This one's got a funny little looking chart to it, but clear breakdown.
Yeah, was it somebody's going to buy it out and then change their mind?
I don't know what happened with it, but it's literally consolidated between 60 and 62 for the better part.
Okay, that right there says danger to me. When you see the volatility, then it goes flatline like that, there's something wrong there. Too much news or too much merger
that's
action.
A weird one for me too. When I see charts like this, it's like a schizophrenic.
Look on the volume though on the breakdown. The last 2 days.
Well, that's big increase in volume.
Little increase in volume. Don't mind that. Another one. Let's see if I got one more. Here's one that I wanted to get your guys' take on. Well, I got two of them. One last one on the bear side. M is in Matt. S is in Sam. I is in Indigo.
Sayonara.
Isn't it bye-bye time?
Yeah, something's wrong with that company.
It's breaking a big $60 low.
They never filled the gap.
Let me see a weekly perspective on it.
60 was old resistance somewhere else.
Oh, this is bye-bye. Yeah.
It's gone.
55 target.
There's an M right
55
there.
target. So shooting for 55.
There's your bearish breakdown right there.
You've got a big violation of primary trend. So violation of primary trend.
So we got MSI and CMC.
I don't think $50 is out of the question.
I'd say the initial target 55.
55 a good target though.
Hey, no, I bet if you throw your Fibonacci's on there on that weekly, it'll put it right down there in the last support.
Fibonacci and Tim said
let's do that just for fun.
No, but Tim puts
Hey,
on
Tim,
the
can you put on your webcam while I put on a Fibonacci real quick here?
Tim. I do love this. Did you listen to the podcast yesterday? Have you guys listened to that yet? You got to listen to it. I had my daughter come on and give Tim a lesson in Elliott Wave and
That
Fibonacci.
is
5 years.
fantastic. I had my daughter pop on my class the other night and show him candlestick analysis.
Awesome. Dude, you got to teach them while they're young.
I got a better
Tim,
one. I had a
so
mentor
there you
student
win.
in my office today that he brought up a spreadsheet and he so wanted to share his research with me on his Fibonacci, and he said, "Okay, Tim, look at all of my stocks. I've counted all the waves out. This one's in a motive wave 6. This one's in a this wave, that wave, Fibonacci 66, whatever." And I just look at him. I'm like, just email it to Matt. I don't care.
I'm going to make you a directional trader one of these days, Tim.
No, it's a Matt. I don't care.
It's good.
Oh,
It's
that's
good.
fantastic.
But yeah, no, I like that.
Hey.
And,
Yeah, I
and
see
you
that.
called it, Gino, right there. It's at 54.82 according to the way I drew it. So nothing like a.
Yeah, there you
hey,
go.
there is nothing like a Fibonacci line to make my bias come true.
Yeah, I agree with that.
Now you have somebody to blame it on if it doesn't work.
I got a couple bullish ones for you, though. Okay. Pacific Ethanol, PEIX.
Yeah, that's running.
Break out on a high base. Look at the volume, though.
Looks nice. A little tight of a channel. for
Pretty
me.
high on that. Yeah.
I like it. Okay, so I got that one. I haven't decided on a target on that one. It's kind of a little difficult to target.
Let's
that
not
one.
overthink it. 25.
I think like 2.5. Yeah, probably 2.5 up, probably 25 for whole number. BKS.
Oops, hold on. BKS.
BKS.
Breaking out right now. Barnes and Noble. Now,
Nice
this is
breakout.
one that I would not ever want to own. I would trade it, but I wouldn't own it.
No, you don't own bookstores.
No, I've got Amazon Prime.
Yeah, exactly. But good volume on the breakout though, on Barnes and Noble.
Yeah, so I would definitely.
Reverse head and shoulder.
I have done my job. I gave a couple bear. I gave
There
a
you
couple
go.
bull.
There you go.
I like that one.
Even though I'm a massive bear in the market right now.
Yeah.
Explain that. Let's get into that. Let's transition a little bit. So we've talked about some stock picks, and one thing about all this is that you can find good bull and bear stocks in any market. Matt, you had a write-up on Sunday when we post our newsletter at tackletrading.com, and people who are registered there can go and read that. Kind of give us the Cliff Notes version of your newsletter on Sunday, Matt.
Oh, my economic analysis is completely clouding my technical analysis. That's my complete write-up. No, it's guys, it's preparation. The things that I'm seeing in the market right now, it's concerning. And I wrote the newsletter, Tackle Trading newsletter on Sunday, and I talked about how on Sunday night, Monday morning, we had just a rash of negative news out there. And that rash of negative news in the market just kept going up. Negative news after negative news, market kept going up. And I was getting some questions. Matt, why is the market going up? Ukraine's worse. Iraq's worse. Israel's worse. Bombs are dropping and buildings are collapsing and Ukraine's blowing up, tanks and stuff like that. And housing data came out, and that was bad. And market's going up. Why is the market going up? And so, I decided to take the opportunity to kind of talk about why the market is going up, what's going on right now, and basically I talked about how, the macroeconomics and one of the reasons why the market has been fading up recently is the quantitative easing. What's going out there with the Federal Central Bank's monetary policy, and not only the U.S. Central Bank, but other central banks like the ECB. One of the big reasons why the market responded so bullishly on Monday and specifically Tuesday was because the ECB came out there and they were going to do a $1 trillion bailout of the European Union markets. And, the market likes nothing more than free money. And so the market responded bullishness to that. And interestingly enough, though, today it was actually announced that they're not going to do that. And that's one of the reasons why the market kind of stalled today. And we'll see kind of what the market does tomorrow and Friday. But it's just it was every newsletter we do is a little different depending on who's writing it. But the one on Sunday I decided to write was more about just economic analysis.
And who gets these newsletters, Matt? I mean, how can people read them if they want to?
sign up for I believe it's the rookie level right now.
Yep, I believe rookie level gets.
Yeah, sign
Yep.
up. We write these newsletters every single week. We post video blogs and whatnot. There's four different things on tackle trading. You have the rookie, the free version, which is a lot of blogs and free videos and whatnot. The podcast, obviously, and then you have the rookie version, which is the newsletters as well as a weekly, uh, some other things I'd have to kind of go in there. And then we have like the pro version and whatnot as well. But if you want to get access to the newsletter, guys, we send it once a week. It's the best newsletter in the industry. And I say that because you got the best coaches out there writing it. Real traders, real information all the time.
Love it. Now, I want to get some feedback here from Noah and Gino, because Matt's talking about the economic, conditions out there in the market, and also some of the news and the fundamentals that are going into it. What we've seen since Sunday is really light volume. Do you ever look at a chart for the market, the S&P, the NASDAQ, the whole thing, look at the internals, and do you discount the action in the technicals if the volume is lightening it up like it is right now?
For me personally, that's one of the things I look for a contrarian trade. When I'm looking at this topping out and I'm thinking that's going to correct, that's going to drop, the less participation you have in the move, I think the less conviction the market has in that move. And then the more participation you have, conversely, you'll have more conviction behind it. So I would say that decreasing volume as the market's making those new highs tells me that not all participants are in it. And you think about it, the higher it goes, the fewer people want to buy, the more people want to sell.
Gino, what about you? Any thoughts on any of this stuff?
Yeah, exactly. I was going to reiterate what Noah said is, when you hit new levels, you're expecting to see, and breakouts, you're expecting to see good volume conviction. I don't see a lot of conviction there, and that's what usually happens around these fat numbers like 2,000 or critical levels, is the market's like, okay, we hit that level, now what's next? Who's going to go bullish? Who's going to go bearish? Yep. And what's really going to happen is an institution's going to step in there like Goldman Sachs or Night Trading, and it's going to be a big day of volume, and they're going to pick the direction. So they're going to either
I actually have a really good analogy for this. I grew up in Salt Lake City, and I thought I was going to be a ski bum growing up, and I'd go up, and when I was a kid, before I realized I could die, I'd go with my buddies. We'd go find some gnarly jump or some gnarly cliff because we thought we were going to make Warren Miller ski movies, and we'd go find this big cliff, and then we'd all stand at the top and say, "You go first."
Exactly.
And if you go first and you don't die, then maybe I'll go second. And it's that market at uncertainty, just like you said, to just.
And, I've actually had the privilege of being on the floor and watching these guys. And when the market hits these stall points, usually like after lunch, when they get back from lunch in the SIBO, they're all looking over at the big institutional hands. When they're on the floor,
waiting to see what they do.
If their palms are facing away from them, they're selling. And when their palms facing towards them, they're buying. They're watching the hand signals, and they're always glancing over at the Goldman Sachs, the Night Trading, to see what they're doing, just because sometimes they need to follow their lead. As us being on the computer, the volume and the price action, that's how we follow the lead. We got to look and wait, where's that volume spike going to come from? And I don't see any big news this week, really big, coming up. We get the PMI, we get the machine sentiment.
GDP
it's
tomorrow.
not like we have a FOMC meeting.
GDP in the morning.
Yeah, preliminary.
Yeah, that's a pretty big one.
Yeah, it's the biggest
But I
one.
don't think the market would totally dive in volume the whole week waiting for that.
Next week we've got stronger data coming out. We got non-farms and things coming out, and so.
Well, the unemployment report is on Friday too. First
That's
Friday
a big
of the month.
Next week's a
That's
big
a
week.
Yep.
Yeah.
Well, it also could be we're coming to the the end of summer. That could be having an impact on the volume. We're overextended in the market. I don't think anybody in the market right now has the conviction one way or the other to really drive price action until, like Noah said, you first.
Yep.
By the way, Matt, you just made my night for calling it coming to the end of summer. Do you know how many people in this world don't realize summer goes until like the middle of September?
Yeah.
Right.
Well,
yeah.
I like
July,
it. I don't know. You guys are talking about my kids are off to school, but it's still summer where I live, and I'm hanging out. I'm going out and doing stuff tomorrow. I'm setting up
right.
automated alerts and triggers and stops, and I don't sit in front of my computer because that's for suckers like Gino.
Yeah, we only have summer and spring here in California.
Yeah, shut up. Actually,
Well, as a godless pagan, I live my life around the solstice and equinox system, so I know exactly when summer ends.
I like
you
it.
are an
I like
Aquarius.
it. Well, actually, that does
by
bring
the way,
to mind an interesting thought, just random thought. Is this is the time of year where your funds are looking to determine whether or not they're thinking a strong fourth quarter is coming, or we're going into a weak fourth quarter, and because they want to close their book and profit, you'll see some institutions deciding whether they're bullish or bearish between September, October.
I think
Yeah,
September.
what blows me away, the big retailers haven't been reporting good earnings. I mean, look at Tiffany's wasn't great, but Best Buy, they're 3 years
Best
in a
Buy
row.
might be bankrupt out of the market in 2 years.
Right, and then they get these guys rallying out of that. If you look at the RTH retail sector, you would expect it to be doing horrible, but check it out, it's not. It's actually doing pretty darn good.
What was the that computer store that was bankrupt and dead like 7-8 years ago? Was it Circus?
Cal-
I think it's all of them, Matt. The only
CompUSA.
the only one still alive is
Circuit
Best Buy.
Best Buy,
Circuit City.
Best Buy kind of like Hollywood Video 10 years ago.
Obsolescence risk.
Or-
I don't know. People do they
Blockbuster.
still need a
And
showroom?
then you got Radio Shack.
How does Radio Shack still exist? Somebody
Yeah.
please tell me.
They don't care about losing money. That's
They
why.
sell iPod. They
Oh
say
my-
I can tell you exactly why they exist. They sell cables for my iPhone. They sell plugs for the laptop and things that you break. That's the only reason they're.
And phone contracts for the
Yeah.
big phone carriers.
Yeah.
Which actually, Matt, something you tweeted at me today. There was an acquisition in the market. What was it about?
Oh, don't get me started.
No, I want to talk about it. It's
I don't have the,
Somebody
I don't have the
Google-
makeup to talk about this. It was
Quick.
Snapchat, for God's sake. It was Snapchat.
Oh, Snapchat, but
Snapchat with zero expected earnings. They have no business plan for revenue generation. They have no ability to create revenue, and they got a $10 billion market evaluation. Just last year, their market valuation was $750 million. What the hell happened? What happened to increase that to $10 billion? There are people freaking cheating out there in the market. It's ridiculous. Oh, and by the way, did you guys see the story of the stock that was created that isn't really a business, and they raised $5 billion in market cap?
no, wait, that's a real thing.
That's serious. It was this week. This is the shit that is happening right now.
It's called Boiler Room.
It was created. It's not a company. It was
That's
like
right.
I cannot remember the simple head, but it was created this week, and it was pumped and dumped for like $5 billion. I'm not kidding. And before the guy could cash out, this was all over. Before the guy could cash out, the Nasdaq halted trade. It was traded on the Nasdaq. Holy shit! Oh my God! I told you not to open this door. I've been saying all week about it.
First of all, there was a boiler room drop, which I love. We're gonna have to get some video of that now soon. One of my favorite things. My favorite thing in that whole movie is when Ben Affleck comes in and gives the speech to the new brokers.
And that's real life right there. That's exactly true.
Yeah, it's the best. Hello Kitty, if it went public, would be a $10 billion market cap.
Snapchat, Matt, you could take selfies of yourself, and they could send them to people, and then they would erase a few minutes later.
It's for people like Brett Favre to send to the ladies of the night.
Right.
This is ridiculous. Absolutely, yes. This is completely insane how these mergers and acquisitions have gone. And the reality is, this is what happens when you create bubbles of free money. Companies use it as a playpen. It's nothing to them to buy out a chat function for $19 billion or Snapchat for $10 billion. Because why wouldn't they? They're playing with free money, and they know it's going to go away sooner than later.
Matt, tell us how you really feel.
First of all, I'm going to install Snapchat on my phone the second I get
And
off.
you know what I'm going to do now is I'm going to send you a Snapchat, and I'm also going to get a button that goes bleep, so I can bleep, Matt, bleep, bleep.
Tim, you know what? Before I forget,
$10 billion market cap. The number one reason I got $10 billion market, because everybody knows they can't do revenue. It's because it's the number three downloaded app at iTunes for the millennial generation, and it's their way of sending them marketing campaigns. It's ridiculous. I hope they lose everything.
Dude, the kids are on Snapchat. That's how they date these days. They don't even know how to have a conversation.
Kids don't even have a job.
I know.
They're going to grow up without the ability to get a job.
I'll tell you what.
Really
I won't let my kids have Snapchat because there's only one good reason to have Snapchat.
That's about right.
Rep Farm. Why do you think I went there?
No, you did go there. Now we can't come back, Matt. That's the problem. Sweet. I think with that, this is a great time to wrap it up, Tim.
You know.
Wait. Hold on. Let's go out on a high note. Let's do something awesome, then go out.
Well, I'll tell you, there are a couple things. Let me ask you guys. You know, non-trading related. What have you been doing interesting lately? Can't make this all about markets.
Hey, college football season kickoff starts for me tomorrow, so I'm in.
I love that. Is it the Utes play in town?
Oh yeah,
no?
they're in town. We got some Patsy coming in. Doesn't matter. There's a game and there's tailgating.
I love it. I love it. Gino, what about you? Kids back to school? You doing anything?
Daughter's back to school, and I'm helping out with the soccer this year, so I'm going to start running again, trying to run. But, you know, I'll tell you, these monster waves are hitting California. It's a wreck. We haven't had waves this big for 10 years. You guys see them on the news? So check it out. At lunchtime, I go, let's do an hour lunch. I might be able to squeeze something in. I was with my mentorship student today, and I sent him in a different direction. I went to check out the waves. Completely flat. There's they're flat here. I'm like, what is the news talking about? Because they're coming from the south to the north, and my beach faces north, so it misses it. You have to be up in Malibu. So that was kind of disappointing. You know.
I have a question for you, buddy. How's that? How's the drought going down there?
The what? Oh, you know what? Yeah, they're starting to put restrictions on water and stuff. So it's you got to be. You know, it's. We've had a horrible drought in California, and that's going to really affect the farmers, which is trickling down to prices in food around here, because now they're going to have to import it. They're taxing the farmers. You're going to see farmers folding up and leaving California. So California's going to have a hard year, and I think it's going to trickle down.
If California had a ticker symbol, I'd short it.
Yeah, and this earthquake didn't help. That's $1 billion.
Yeah, I saw that $1 billion. Gino, as you're going through a drought, what's your feelings about the Ice Bucket Challenge?
Well, that's the thing. Have you seen my post on the Ice Bucket Challenge?
I have not.
Oh, you got to go to my webpage or my Facebook and look at. I don't like cold water. I think you'll enjoy my post I put on there. I was challenged. I did it, and
I saw Matt Damon had a good one. Matt Damon was talking about water preservation and whatnot, and he basically dumped water out of the toilet to so he didn't waste drinkable water.
Charlie Sheen made it rain on his head with like 10,000 bucks. Yeah.
That was a good one.
Like Did anybody challenge you yet, Matt?
No, and I won't do it.
And you know what the sad thing is? They made enough money. I even put that on my post. They made enough money. It's time to move on to a different church.
No, I think it's a really good cause. I think ALS is something that everybody should understand. My daughter got challenged. My son got challenged. And they both did it, and I both had them. I said, the only way you're going to do this, if you go spend an hour on that laptop right now researching ALS. That's it. And so they both went and spent an hour researching ALS, and then did the Ice Bucket Challenge. I'm okay with that. Awareness is a great thing. The only thing that drives me crazy about it is when people just do the Ice Bucket Challenge because they think it's cool because their friends did it on Facebook.
Right.
And I think it's
Matt,
now officially people are tired of it, so we've got to find.
Yeah.
I was just.
You got to do something different. You'll like mine, Matt. Go look at mine. I didn't do anything normal.
Yeah, I'll donate. I'll give my $100.
Matt, what you doing interesting this week?
Oh, checking out, my man. Completely checking out.
Isn't that what Labor Day's for? I mean, get your family outside, go do something, relax. Yeah, I like that.
Humanity.
Well, you guys are thinking it.
Canyon, and I'm leaving everything away, and I'll have 200 emails when I get home on Sunday, and I'll do a massive alt-delete.
Just forward them to me. I'll reply.
That explains a lot.
I'll just.
Hey, Matt, did you get my email? Hey, Matt, did you get my email?
Hey, listen, the way I figured, if you're always behind on email, you could do a mass alt-delete. And you could, if it's really important, somebody's going to get a hold of it.
I just came up with an app, Snapchat for emails.
I hate you.
No,
right
think
now.
about that right there.
I'll
Think
tell
about
you-
that. You could send an email, and if they don't open it, it deletes within a moment.
Okay.
I would install that on my box right away.
This is something that might be good for professionals, not just the Brett Favres of the world.
I'll tell you something interesting, Matt, that you'll like.
Politician's name that got caught doing.
Hey, Noah,
Anthony
why don't you go
Weiner.
to my Facebook real quick?
You want
Look me up on
you
your
really
Facebook.
want me to go to your Facebook, huh?
Oh, well, go to Facebook and look at mine. See if it came through. I
Are
want to see
we
if you see
going
the
to
video.
promote your Facebook, man? Hey, Gino Poor on Facebook, guys.
Ain't that?
Check it out.
And while we bring that up, I'll tell you guys one thing I'm doing this weekend is tomorrow I'm going to install a Bitcoin wallet, and my local pizza shop, I'm going to do it on my phone, Gino. My favorite pizza shop in Salt Lake, they now take Bitcoin, and I'm buying lunch with Bitcoin tomorrow.
Really?
By the way,
Yeah.
we need to talk to our program. We have to take Bitcoin on
Oh,
tap.
absolutely,
Yeah.
absolutely.
Revolutionary.
Well, let's see what we got
Evolution.
here. Gino, I just looked for Gino. Where is he? Gino Poor, come on, right there. And Gino Poor.
There it is. There's the video right there.
It is.
Okay, watch that video, guys.
Oh, man, people can look this up on their own time. Seriously.
No, you got to see this. This isn't normal ALS bucket challenge. That's not normal.
No, Gino, you're not normal.
Watch
Let's
this.
just leave it at that.
That's why I'm a
Gino
great
was
trainer.
challenged by the
You have the
Rutherfords for the
snorkel.
ALS Ice
You got it.
Challenge.
And this totally sucks.
Which one's Gino?
Hate cold water.
Oh,
I think you missed.
Well, watch this.
Woo!
That was freezing! Oh my god, it's so
I
good.
got a wetsuit, snorkel, swim cap,
That's recorded. Let's
Eh,
stop.
you're upside down.
and I'm saying it's freezing.
Did you get the spider is the question.
Oh yeah, that we're both jumped.
listen,
Oh, I love it.
That was an amazing rendition there. I'm just wondering how you figured out the technology to actually post a video on Facebook.
Only funny because it's true.
That wasn't me. That was my daughter.
Oh,
That's the high note right there. That's it. High note.
Shut
We're
down
going
the
out.
coaches show.
well, who's going to do the dropout? Is it me or is it Matt or Noah? I'm going to have Noah do the dropout. This is like an audition right now. Noah, you do the
Doing
dropout.
drop-
Close us out.
Hey, this has been real. This has been fun, but I'm not sure it's been real fun. I've had a great time though. It's been a good time. Hey,
Cool.
thanks guys. See us on Tackle Trading for more of this kind of banter. We'll be back next time with our coaches show. Catch Matt and Tim and whoever else they can talk into showing up for their podcast, and me and Gino posting as always. So we'll see you guys on tackletrading.com.
Thanks, guys.
Awesome. Real
Thanks,
quick,
guys.
Tim. Real quick. Hold on. Got a public podcast, Trading Justice. Check us out on iTunes, guys. Leave comments, and if you like us, leave a 5-star rating. If you don't listen in the first place. Later.
Get in the game. www.tackletrading.com